Well, it's a very good morning from him, and it's a very good morning from me. Welcome to my Mortgage Insights, my live stream. Hope you're well. Didn't appear last week because I was on my holidays down in Cornwall, which is very nice. We had beautiful weather actually for a few days, which is fantastic. Now, of course, the weather's gone downhill. It's back to normal temperatures. Okay, let's go on air, shall we? And welcome you to my mortgage update. It's got some particularly interesting things for you today, looking at mortgage MOTs. Because the world's changing, you need to be able to adapt a little bit. So we're going to take a look at what you should do in a mortgage MOT and what is an MOT. But I was just having a little look around the news this morning and thinking about sport, really, because it's summertime. And Gloucester Rugby actually won something. It was the ladies. They won was it the Premier 15s title against Exeter. So well done them. And Gloucester Rugby boys team can't win anything at the moment. And of course, the women's football team won the Euros last year. And of course, the English football team doesn't seem to win anything at the moment. Get to the finals, but don't win. And I think the Ashes are going to be won by the women's cricket team. So it just makes you think, doesn't it, about life, the universe, and everything. Of course, last week, everything changed the week before as well in the mortgage sector, in the financial services sector, if that's where you are, particularly in the mortgage sector, because it looks as though interest rates are going to be high for a long old time now. I think we all knew that anyway. Inflation is just like not coming down. It's just like really rigid, isn't it? And the Bank of England are putting up rates again to try and combat that. And of course, the government are looking at other ways of doing so. Maybe, I mean, one of the international bodies suggested that the government cut back on government spending. Oh my God, how can we do that? We've got a big state. Let's have the biggest state possible and get everyone to pay for it. So cutting back on government spending really and increasing taxes. I don't know if that's going to happen. But the more important thing, though, is for you as a mortgage advisor. I'm going to talk about this mortgage MOT. Now, you probably heard the phrase mortgage MOT. I quite like it. The challenge you've got at the moment, of course, if you're relying on people buying and selling properties to arrange people's mortgages, there's going to be a little bit of that, but not much. Not keep you busy. So you need to be able to talk to your client bank. You need to be able to cover your client bank with your goodness, if you like. And during this period, your clients, and we've seen the numbers, millions of people, of course, are going to be remortgaging or product transferring over the next couple of years, and you need to be in with those people, offering them an MOT, not, as I said before, to be able to get the best deal from the marketplace, because people aren't bothered with that. People would rather just click a couple of buttons on the lender's website and product transfer without any affordability checks or anything like that. They actually researched it. People don't mind getting a slightly higher percent if it's easy. So don't start flogging on best deal, because you're just on a downward trend if you do that. Now, the mortgage MOT covers all sorts of areas of your help and assistance and guidance. And what I want to focus on today pretty much is the concept of helping people who are going to struggle with their mortgage payments. And that's the big thing. So what I want to do now is take a look at the help that's available for people who are struggling with their mortgage payments. And then I want to pick up on the rent a room, just to update you really. So I'm going to head over to the left-hand whiteboard to give you some updates on the helping borrowers through payment stress. Now, I typed my little title up here, helping borrowers through payment stress. Now, it's going to affect a lot of people. We're talking about interest rates like rocketing for many people who may be fixed at a couple of percent, maybe lower. And when they come to refix, maybe this year or next year, they're going to have to be paying 6+%. That's another 4%. If you've got a big mortgage or an average size mortgage, that's hundreds of pounds. Now, for some people, it's 800-900 quid a month, which is a lot of money if you're on a salary. Yeah, you had a pay rise, but where are you going to find it from? Some people will struggle. Now, the broker's role, of course, during the MOT is to talk about this, share with the client what the numbers are and get their impact on it, because they may want some help. They may want some advice to help them to afford their mortgage. Now, the FCA, of course, are the king of the country. The FCA have got their MCOB 13, which has been around for 19 years now, and it works really well, actually. MCOB 13. In fact, MCOBs were one of the best things the FCA's ever done, because they work. And what they do there is they ask the lenders to treat people fairly. They make sure that people are looked after if they are in trouble with their mortgage. And they've asked lenders now to lighten or they've given them permission to lighten affordability checks now when helping customers with their monthly payments. And that's really important because some people's affordability might not have been as good as it was a couple of years ago. And of course, stress rates, etc., have increased. So generally, affordability's come down. So what have we got then? Well, first of all, we've got lenders. So let's take a look at the lenders themselves. What can lenders do to help people? That's the first question. Well, there's a lot of things lenders can do. The first thing is they can switch to interest only. Now, this is quite an interesting one, interest only, because most people now are on repayment mortgages. And if somebody's struggling to make payments, you can switch to interest only. And the government actually have sort of stepped in because they've lent on the lenders, bit of leaning, you do what we tell you kind of thing, because we looked after you back in 2008 because we recapitalized you guys, And they've said to lenders, look, we want you to offer interest only to people. And what they've cleverly done is they've offered it for a 6-month period, and it doesn't affect your credit rating. So your credit rating is still good. So most people, you'll probably find, will automatically go to this. Lenders will make it almost like a default option. And it can make a hell of a difference to your mortgage payment. Because if you go to interest only, capital doesn't need to be repaid. If you've got a short-term mortgage, that makes a hell of a lot of difference. It could just be enough to help the customer to be able to afford the mortgage for a 6-month period. And they'll probably extend it beyond then as well. And I think it's a really good scheme, really good system. The other thing you can do, of course, is you can extend the term. Now, that does depend, of course, on where you are in your life. But if you can extend the term, it doesn't make a huge amount of difference. You'd be surprised, actually, the numbers. It doesn't make a huge amount of difference to somebody's monthly payment. It can bring down a little bit. So you could extend the term maybe into retirement, because later life lending is quite popular now, of course. Plus an interest only, that could reduce your payments down quite dramatically as well, which I think is brilliant. The other one, of course, is the permission to sublet the property. Now, of course, we talk about that when we talk about lodgers. So giving them permission to sublet a room, again, might be a way forward. So there's quite a lot of help from lenders. And of course, you can talk to the lender on behalf of the client, nothing wrong with that, or you can give them a number to phone. Lenders are employing mass departments of people taking calls from customers. But I think if you give the information about this, it puts the reliance on you, the mortgage advisor, rather than the lender. Remember, you're there. They're your client effectively, and you're helping them through these discussions, and you're talking about what options are available. And then you can facilitate the contact to the lender direct, or whatever lender you decide to use, of course. Although you're probably looking at product transfers here. PTs is what we call them, product transfers. You're not going to be remortgaging, aren't you? Somebody's going to be struggling to make payments. So what about the government? What about Jeremy and Rishi? They've been busy looking after everybody. Of course, the government have had a lot of pressure at the moment, the UK government, to bail out. Now, I think this is wrong. I don't think we should. I mean, we've got used to bailing out with, furlough, the banks being bailed out. If anyone gets energy costs, why should mortgage holders be bailed out by the government? I mean, tenants should be bailed out as well. So I think that's not going to happen ever, not in a million years. But what the government have cleverly done is they've kind of looked at ways they can help, which won't cost them anything. I think that's quite clever. So first of all, they've lent on the lenders and made them do a few things. As we said before, they've lent on them for this interest-only holiday of 6 months. And they'll probably start promoting that, get an interest-only holiday for 6 months kind of thing, which will help a lot of people. They've also lent on them to give subletting permission as well. So the other one is the 12-month moratorium. So let's just put that in black here so we can see what they've done now. For 12 months, nobody's going to be repossessed. Moratorium. It's a lovely word, isn't it? From being repoed. There you go. Which I think is obviously a splendid thing. Somebody being repossessed, the worst thing could ever happen to anybody else. And there's a few options as well that people can look at. So what else have lenders done? Well, what they've also done is they've improved the Smee system, support for mortgage interest, which has always been around. They reduced it to a 3-month waiting list a couple of months ago. So once you're on universal credit or you're getting benefits, you can apply for support for mortgage interest on a bit of your mortgage, not all of it, and you can have your interest paid by the government. Now, it's not a welfare benefit. It creates a loan. It creates a second charge. Effectively, the government are becoming part owner of your property. and the loan is repaid on sale or whenever you want to, of course. Now, what they're going to do here is they're probably going to be promoting that a bit more, and they'll probably at some point, I think, make it available to somebody who isn't claiming benefits, isn't on universal credit. Because effectively the government are just taking a charge on somebody's property. They're kind of lending people money, aren't they, if you think about it? But it's not like a welfare benefit where they say goodbye to the money. They're lending. They'll get the money back. So it's a good investment. I think they'll probably rebrand Smee at some point to make it available for people. So if you think about it, you get interest only. And if you really are in trouble, you can get a Smee to cover the interest for a little while and then extend the term. So there's lots of options available to people who are going to be struggling as well. And I think that's a really good thing. I think they'll probably rebrand the rent a room, or at least publicise it more. We've got a little session coming up for you shortly on that one. They'll probably rebrand that, which means to make it more available to people, market it so people know what it is. They might make it more tax efficient. At the moment, it's pretty tax efficient anyway, but they might improve the tax efficiency. Maybe the capital gains tax issue they might erode as well. So the government are doing quite a bit that they can to help people, and I think that's a good thing that they're helping as much as possible. So your job then as a mortgage advisor is to talk to the client about this one. If the client wants to go and see the CAB, they can do, Citizens Advice Bureau. But I think you should have this information available to assist them and have the numbers on a calculator ready to work out. What you are doing, of course, at this point is you are doing a product transfer or a PT. Now make that known to the customer when you talk to them with your mortgage MOT. Make it known that you can do the product transfer, and you'll probably end up doing that, and you'll help them through that. You aren't going to charge for that, of course. This is how will you make money from this one? I would hope that you're going to be looking at their protection needs as well at this point, and you do make a few pounds from the product transfer, but not much. But if you do a lot of these, you will certainly be able to cover your costs as a mortgage advisor rather than making great big fat profits as maybe you've made in the past. So focus on the fact to the client that you are probably going to look at the PT. You will look at the marketplace to see what else is available for them, but a product transfer with their existing lender will allow them to do these things. That's the whole point behind it. So I think this is a key. I think this is a key because the last time this all happened, and 2008 crash, there's quite a lot of government help to help people with repos, and the repos are quite low then. But the last big problem was in 91, sort of 1991, 92, 93, when we had a property plummet. Prices collapsed, particularly in the southeast. Repossessions just went completely out of control. Lenders repossessed quite happily and readily. People handed in their keys, you see, back then. Because what happened, people had a mortgage and a house, the house price went down, the mortgage became negative equity, and people they just gave up. Here, Halifax, have my keys, and that was quite a prevalent thing. And so it was awful situation. We don't want to repeat that. So I think it's your role to do an MOT. Hope that's been a good update for you. Bye. Go on, let's head back over here, shall we? Let's look at the last session now, which picks up on Rent a Room. Again, we're updating our boot camp. We're doing a lot of updates at the moment to our boot camps and all our products, etc., because all the new syllabi, is that the plural of syllabus, are coming in September. And there's not that many changes, but we take the chance to refresh as well. And we have new boot camps, there's automatically updates for people, new revision guides and podcasts. Actually, we're doing a load of podcasts this summer as well. Some new ones, which everyone's invited to come along to. And by the way, to get invited, you've got to be on my member list. It's as simple as that. It's free. Get on our member list. If you're interested in our member list, which I'm sure you are, then what you want to do is you want to scan in that QR code. And just take a photograph of that with your camera, and that will take you to a website, that landing page. From there, you can then pop into our member list. It's free. And if you're on the member list, we tell you about everything. We give you free stuff. We give you new information, CPD. We give you invites to free podcasts you can listen to. We've got all sorts of great things going on in the summer to help you as much as possible. But you've got to be on the member list to get in. Okay, let's go on to our next subject, or last subject. Let's pop over to my other whiteboard as well, shall we? Let's head over to this whiteboard here. There we are. So hello from this whiteboard. Now, this particular topic I want to take a quick look at for you, just a quick update for you on the Rent a Room for distressed borrowers, I've called this one. Now, what I'm looking at here is the government's Rent a Room scheme. Now, as we know, of course, mortgage rates are going up, and people will struggle to afford their payments because we're talking six, seven, £800 increases for some people. That's massive. However you look at it, that's a lot of money to be able to find to keep the wolves from the door. So the government and lenders are going to start promoting the rent a room situation. Now, the rent a room is an allowance, first of all. It's a government allowance, it's a tax allowance. That's what it comes down to, which gives somebody the ability to earn £7,500 per annum tax free. That's pretty much what it is. Now, to get this income, of course, you've got to rent your room. So you're going to be taking a look at a lodger. Now, a lot of people have got spare rooms, spare bedroom. A lot of people converted their spare rooms into offices during the pandemic. Now, was it Zoopla or somebody, one of these companies, reckon there's about 9 million spare bedrooms that were converted into offices during the pandemic. Probably right, actually. Most people have gone back to offices now. So people could rent a room. Now, the whole idea of having a lodger might worry you because of privacy concerns, but there's plenty of advantages, disadvantages. Now, to qualify for a lodger, let's get a different colour pen here so we can give you a bit of variety. To qualify for a lodger, you've got to have a house, of course, which normally you own or you have a mortgage on it. You could be a tenant, but that's usually quite tricky because you're subletting a letting, aren't you? But if you own the house or if you have a mortgage on the house, the first thing is that house has to be fully furnished. So it's got to have everything in there, kitchen and bathroom, etc. Nice little chimney there for you. So it's a fully furnished property. And you have to have permission from your lender to be able to rent a room. So what you're doing is you're renting one bedroom. Now, the lodger, as we commonly call her, and legally this lodger is called an excluded occupier. There you go. Let's put that in red, shall we? She's an excluded occupier. Yeah, I bet you didn't know that, did you? That's the technical term for a lodger. Now, the problem is, you see, with being a lodger, you don't have many rights. You would need to take out some form of landlord or lodger contract. So you need a tenancy agreement. Let's squeeze that over here. Now, you need a tenancy agreement. Now, a tenancy agreement, of course, is something that you'd have to take out with the lodger. It's not as official as a short hold tenancy. You can go onto all sorts of websites and they'll give you templates. It's something you do with your lodger. You don't need a lawyer for this from that. You can do, I suppose, but you can get templates. And the idea is it fixes up the excluded occupier, and she has access to your property as long as you give her exclusive use of a room with fully furnished bed and furniture, and she has access to the rest of the property, so kitchen, lounge, that sort of thing. You can come to an agreement on that, garden. Then she's an excluded occupier. You do need permission from your lender, so you do need permission to sublet. Okay. Now, as we said before, the government have lent on lenders and said, look, we want you to give permission to sublet pretty much whenever people ask for it. You also need to get your buildings insurance changed as well. The buildings insurance would need to be notified because it changes the insurance. You've got somebody else who's a tenant in your property, it changes things. So they just need to know about it. They're usually okay about it if it's just one room. So quite a few things to qualify. The big one is checking with your lender. Don't forget to do that. They might put the interest rate up, but I think the government have lent on the lenders enough to keep the interest rate as it is. Get a tenancy agreement. This excluded occupier now comes in. Now, the whole point about excluded occupier is that you might have a 6-month tenancy, for example, you set up at the end of it. You can evict them pretty easily. That sounds awful, doesn't it? But it's much more flexible than renting out a property. You're not renting the whole place, you're just renting a room. And if you're unsure about it, go to the Citizens Advice Bureau website. There's plenty of information about them as well. So what's our disadvantage? We're going to lose your privacy. Can't get away from that, and that might be problematic for you. But if the tenant pays you £7,500 tax free and you're able to pay your mortgage, then hey, life has to go on. You have to make some sacrifices in life, and it might well be that you want a bit of company. There's nothing wrong with that. You may have to cater for your tenant, your lodger. But you can charge extra for that. But that's all, by the way, within the £7,500. So if you charge them for food and lodging. That was all part of the £7,500. Again, you might want to share the cooking. It happens a lot, and I think this is a good thing because a lot of tenants will be having a few issues now with rentals. Landlords are flogging off a lot of their properties, so a lot of tenants are struggling to get property. So if they're on their own single, then of course lodging is an option. Renting a room is an option for tenants as well. If they're a couple, it might be a little bit more problematic. But I think that's a really good system. Really good system. During your mortgage MOT, you might talk about this. Mention it, just get their views on it. And if they're interested, as a mortgage advisor, you should tell them about it. Get a fact sheet or something, or just whip over to the Citizens Advice Bureau website. There's plenty of information about it as well. Now, I had a lodger way back in 1992 when my property went into negative equity and I wanted to move out. And I rented a room to a number of lodgers, which was an absolute nightmare, actually, if I remember rightly. I made 250 quid a month, cash, of course, but trying to get the rent was a nightmare. This is before direct debits and stuff like that, really. So I had to get the cash from the lodger. I didn't declare anything because I didn't think about it. I think rent a room had started then, so I didn't have to pay tax on it. But of course, my lodger kept saying, can he put off the rent for another week or two? And being a nice guy, I kind of let him get away with it. But it was a right old nightmare, and trying to kick him out was difficult as well. We had to get the boys from the pub to help out, but don't tell anybody about that one. So that was a long time ago. The world was very different in 1992. That was 31 years ago, good grief. So that's Rent a Room. Hope that's been a good update for you. Bye. Okay. All right, let's wrap up, shall we? Let's wrap up. As I said to you, there's lots of things going on in Tivoli Studios over the next couple of months, July and August. We're updating all our materials. We've got a couple of things that I should just highlight for you. On Saturday mornings, we're refreshing our CMAT1 podcast, which is a very popular product, and we're refreshing it every Saturday morning for a couple of months now at 10 o'clock live. And if you're on the member list, we tell you about that, and you can come along and listen to it live if you want to for free. We're also doing how to be a successful mortgage advisor. We're doing some more videos on that in the evenings around about 5:30 time. We're doing that for a couple of months as well. And all of our materials have been updated, new videos, new podcasts, new revision guides, which we're going to be marketing, of course, putting into our bootcamp. So if you do buy our bootcamp now, it all gets updated automatically for you anyway with the new syllabus. Not a lot of changes. Don't worry about them if you're wondering whether to do the exam before September or after September. There's only a couple of changes. Tax hasn't changed at all, so you might want to think about that. Anyway, enough of that. Hope you have a great week. Hope you enjoy yourself and have fun. Remember, if you want to get onto our member list, that's how you do it. Just scan in that QR code if you wish to do that as well. Other than that, I'm going to say goodbye to you. Hope you have a great week. The weather's cooling down a bit now, isn't it? Which is good for a lot of people, actually. See you next week. Bye.